Hello, I'm Peter Towers, founder and managing director of ESS BIZTOOLS. Welcome to the ESS BIZTOOLS Accountants Minute podcast. Advisory into action, your next strategic move. We've been running a series for some weeks, so regular listeners and viewers would be well aware of that, where we've been challenging accountants and bookkeepers and business advisors to think very seriously about the types of services that you're supplying to your clients. Fundamentally, I believe accountants can provide a far wider range of services to our SME clients. But you need to step back a bit and think about it, and then look around to see who can supply you with those resources. Of course, if you wish, you can spend 1,000 odd hours and develop your own material, but I hope you'll give consideration to our offering, as well as looking at some others, of course, and comparing and seeing which supplier is best going to suit your needs. I believe fundamentally, with today's technology, today's software, today's communications, as accountants, we can service clients virtually at any stage of their small, medium enterprise journey. When I started as a graduate accountant, we had an accounting machine, computers, and a lot of things were done by hand, and the emphasis was primarily on the preparation of an annual set of accounts and an income tax return. And to be honest, I think for many accountancy firms around Australia, that is still the emphasis. Our SME clients need and deserve more attention. And with the technology, the communications and the software, I think it's possible to deliver a virtual accounting, bookkeeping, and chief financial officer service to our SME clients. Obviously, the degree of level depends on how you negotiate with your clients and what your belief is that the client needs. I worked as the chief financial officer and company secretary of a listed public company, and I saw how the big end of town handle their business investments. And they basically rotate around weekly analysis reports, and then they prove that at the end of the month with the monthly financial accounts. That's the process that we are recommending. We call it the 52-week Business Enhancement System, to ensure that there's an analysis, a reality check, and an analysis of why the targeted result, whether it's turnover, profitability, gross profit percentage, or some other index, was not achieved in the week, and finding out what caused it not to be achieved. And if that is a problem, fixing it so it doesn't occur again. Compare that to what happens in your average SME client. They don't know. Sure, turnover might be down a bit, but they haven't got the time nor the inclination when they're sitting there at 10 p.m. at night trying to write up their books and keep their records for the business to then really go into an analysis. But if they had an employed accountant working for them, that would be one of the prime responsibilities, to analyse the performance and to give feedback to the boss. What went wrong? Now, I'm not suggesting that accountants are going to have all the answers for what went wrong, but I think a key role is to be pointing out to the client that the expectation was a 38% gross profit percentage and we only achieved 22%. And then work with the manager of that business to determine what caused that problem. Now, it could be a one-off. It could be that someone forgot to do the stock take, or the stock take was wrong, or there was a mathematical error made somewhere. But it then needs to be fixed to ensure that that problem doesn't continue week after week. So let's move into this process as we see it at ESS BizTools, for you to get started. Now, a lot of people hang around the starting area. They think about it, they plan about it, they argue about it, then they decide it's not the right time of the month or the year or whatever. You need to get started. And I think July is a great time to get started, to get the clients underway for this fiscal year. So choose your first client. If this is the first client you're offering advisory services, choose that person carefully. Not necessarily your largest client, but one who you think you can work with, who hopefully has been making some comments to you about how they line up. They've been interested in undertaking benchmarking reviews, for argument's sake. They have expressed they wish to scale up. Their current turnover might only be $600,000 a year, but they've got aspirations to make it $6 million a year within the next few years. They are going to need your assistance to achieve that. Or they might be talking to you about, how does crowdsource funding work? Could we raise some capital? Or how does the research and development tax offset work? Could we go into that? How much money have we got to spend as a minimum? Do we really have to be a company to claim that taxation benefit? These sort of questions show you that at least your client's thinking along the lines. So they might be the client that you select to invite. And you're going to charge them, so they're getting charged for the pleasure of being your first client. I don't know if I'd actually tell them you were the first client. So you're looking for someone who's open to advice and eager to grow, someone who will appreciate your input and will be willing to collaborate, because you want to make sure that your team understand this process. They can read our material for as long as they like. That's the theory. You have got to get out into the field. You've got to kick the ball, or you've got to bowl the ball, or hit the ball, whatever the sporting comparison you want to make. But you've got to get started in the game. You can't train forever. The second area is to structure the engagement with the tools and resources which we have available at ESS BizTools. And I suggest you start with the business health check, because the business health check approach is to look at key performance indicators and business metrics so that you can compare one day, 1 week, 1 month to another. Now, obviously, you'll choose with the client what the recording process is going to be. I like weekly because our belief is the 52-week Business Enhancement System is the way to implement proper systems with your clients. So I'd be going for a weekly documentation. Some clients might like daily, and that can be recorded as well if they wish. Monthly, I think, is too far away, because you want to know that something happened yet this week and then fix it. That's the whole mandate of this process. We've got workshops and training material in the system which will help you analyze things like the cash flow and the whatever action needs to be taken. Part of this process will be the rhythm of meetings that we suggest, that there should be a daily meeting for the executive team or the senior management. And perhaps in some of the teams there needs to be a daily meeting. And then a weekly meeting to review the weekly performance and profitability reports for each individual business operation. That's very important, because this is this analysis of what went wrong, what caused the problem. The third stage is being able to package it and price it accordingly. Within ESS BizTools, we have a complete worksheet which helps you go through and determine what you think your time estimates are going to be for various aspects of the assignment. So we have calculation of your fee built up for preparation of business plans, research and development activities, raising capital, utilising crowdsource funding equity raising process, raising capital using early stage innovation company, delivering a chief financial officer services, debtors analysis, analysing the personal property securities register, and so it goes on. So we've gone through, broken the job down as I see it, but you've got to estimate what you think the time's going to be to undertake that work for your client so that you're able to be able to talk to the client and give them your fee proposal. And it's very important if you're venturing on a major scale into advisory services for the first time to submit a proposal to your client together with the fee estimate, and make sure you've included the very important clause near the end of the proposal that if the client requests additional work not summarized in this proposal, that an updated fee proposal will then be given to the client. Because you can have some arguments if you're not careful. It's like building a house. Every time you make a change with your builder, you should be confirming it in writing and receiving an update on the quote so you don't get a nasty surprise at the end. I see an advertisement running on TV about 10 to 15% extra being charged on a house project. That's a lot of money. And I wondered whether that had been covered by a written brief to the builder. This is the change, or this is the additional work we want you to do, or this is the materials we've selected to be input into the house, and they might be more than what the spec price that was put on them in the quote, so you know it's going to cost you more, just to keep yourself covered and to make sure that the extras will be honoured by your client, because there's been a process. Each time they've asked for something additional to be done, you've submitted an update to them to cover that. We think we include everything you're going to need to build a good service to your clients. And if in actual practice you come across any issue that you don't believe we've covered in our system, I'd love to hear from you, because we will very quickly deliver that product package improvement to you, and there'll definitely be no extra charge. It's part of the service that we will make available to you to help you perform your role with your client. The next section that we want to cover in this overview is scale up with confidence. This process of being able to assist your clients on an ongoing basis as if you were the employed accountant or chief financial officer is very important, and it will help your clients have confidence to plan the scaling up of their business operations, because they need a team. They need a team, don't they? They need someone who's doing their planning. It might be an engineer, depends what the business is, of course. They need a marketing person, because they've got to market this product or service that they're producing to the potential customers. They will need a salesperson, or it might be the owner themselves or the CEO that's doing the selling. But is there a salesperson, and do they understand their duties and responsibilities? Is there an administration person operating the office? And is there an accounting function? Our suggestion to you is that until your client gets to a certain size, that you should be the virtual CFO or virtual accountant, or indeed the virtual bookkeeper for your client, so that you can then grow with them on the scaling up process. Because someone scaling up needs accurate financial accounts. They need that 52-week business enhancement system, daily, weekly, monthly, so that literally at the drop of a hat, they can produce financials and key performance indicators, and their budgets and cash flow forecasts, their business plan is being continually kept up to date. Because companies who are scaling up tend to need money. So they may have come across someone or been introduced to someone who's a potential investor in their business. And that person asks for a briefing meeting in a week's time. They expect to get the results. They expect to be able to see around the 30th of June, results to at least the 9 months ended 31 March, but preferably the 11 months ended the end of May, that they are able to look at in early July and say, yes, we like to look at. They can go back and look at the last 3 or 4 years figures also that are readily available. The business plan should have been reviewed in January and updates made, tweaks made to it where necessary. The budget and cash flow forecasts are prepared, and the shortfall in cash that the company's anticipating, that's why they're talking to a potential investor, has been highlighted in their forward calculation. Now, it might be caused because of the unfortunate wars going on in Europe and the Middle East, and that's delaying shipment of vital byproducts or products that raw materials that this business client of yours needs, and that's causing the inventories to increase. But obviously that's cash flow going out to make payments, but no cash coming in as a receipt because the products haven't been produced yet. We've got to build up stocks because it's now taking an extra 3 weeks for the ships to arrive, and there's always the chance that they might not come. They might be delayed for 5 or 6 weeks. What happens to your client's business in the interim? So your client needs to be in an investment ready status, I think, at all times. Not to be able to say, well, we can't meet you in a week's time. We'll have something ready for you in 3 months' time. You've probably lost that investor. They go off and look someone else because they're looking for companies who are switched on, who are on top of what's going on. And they say, well, no, they're not doing that. And that can be unfortunate because your client might have a great business, a great idea. But if there's this delay in getting information out and analysing it and making it available for potential investors or for bankers who are looking at investing additional loan funds into the business, it can delay the whole process. So scaling up, and that requires you to have a working knowledge of research and development, because I've never struck anyone yet as scaling up. It's not doing research and development in their business. They may be interested in trying to not deal with a one-off investor, though, in looking at trying to raise some capital utilising crowdsourced funding, equity raising. No matter which way they're going to need a realistic business plan that's looking at the next 3 years, potentially 5 years, but I think 3 years for an SME is probably far enough into the future to go. They need an understanding of the budgets and cash flow forecasts. They need to have examined and understand what the projected balance sheet's showing. And that's when you can be the storyteller. You can sit down and talk to your client and their leadership team so that they understand that if these processes that have been identified in the business plan are implemented, here's some reservations on certain things, which might be because of products coming from overseas markets that I just referred to. We could then look at the control of debtors. You've prepared the budgets on the basis that debtors' days outstanding is going to be 40 days. So there's a clear indication being given to management that it's going to be difficult if that blows out to 50 days because that's going to require extra cash. The creditors' days outstanding would also be analysed and discussed. And whatever that's been budgeted at, hopefully you're going to be able to maintain that. And then we've got the documentation that has to be prepared to go to the crowdsourced funding intermediary. And you need to make sure your client understands the duties, the responsibilities, and the powers that the crowdsourced funding intermediary has under the legislation that's been delegated to them by Australian Security Investment Commission. So your clients need to be aware of what's happening. I think they all need training in an appreciation of company directors' duties, and many of our clients will benefit from having a board of advice so they can have some people who are able to really contribute to their business. But that's another cost. I don't think voluntary arrangements for directors or board of advisors work, because you want that person to turn up with that matter up there, the brain engaged, ready to work, with some questions that they want answered because they've read the material. They should have had the material relative to this meeting 72 hours at least prior to the meeting, so that they are informed. They're ready to ask questions, to make suggestions. That's what you're paying them for. That's what public company directors do. I saw some of the best ones in action as a public company secretary. I was very impressed. I also saw a couple of bad ones, but we encourage them to seek engagement somewhere else. People turning up for meetings that opened the envelope that was sealed as they walked into the meeting. That wasn't good enough. The guideline is at least 72 hours prior. They received the briefing material, and they had received it. I knew that. But they hadn't opened it. We used to deliver it. Our own staff would deliver it to these people who were directors. So you need to think about these processes. I think you should be trying to deliver a service as if your client was a public company. Should be encouraging the client as they grow to have some external directors on their board, because that will give them some significant insights from people who are running successful businesses. And you're going to be part of that whole process. You and your accounting team will also benefit from this whole process. I've mentioned the 52-week Business Enhancement System. That's vital for this whole process. The annual set of accounts, sure, they've got to get produced. There is an income tax return produced, but that should all reconcile with the information that's been getting produced weekly, monthly throughout the year. And then the tax return can be prepared. It shouldn't be a big headache for you. It just should be a process that's being prepared. So advisory isn't just the future. It's the now. It's today, tomorrow. No much further. Not next month. Let's get started now. And there's a significant byproduct in all this for accountants and bookkeepers and business advisors, in that this is challenging and interesting work which will assist you with one of the biggest challenges that the accounting bookkeeping industry has got at present in Australia, and that is talent attraction and talent retention. Preparing income tax returns all day, every day, is not considered exciting, especially by the younger generation of accountants. They've grown up in a world where there's a bit more excitement than that. Now, I think they understand that a tax return's a document that's got to be done. But wouldn't it be great to have them working, in effect, on a client that they're seeing the weekly results? They're then reconciling the weeklies with the monthly actual accounts to make sure that the data being used in the calculation of the weekly results is accurate, because that's what management are using to run the business with. And then they see the process. They see the board reports being prepared. They may even be invited to sit in on a board meeting to assist in taking some minutes. That's a great advantage. Years ago, when I was a younger accountant, whenever you went to see a bank manager for a client, I'd go in with my client. The bank manager would come in, and he would always have with him a young lady or a young guy who were trainees. Now, some of those trainees, one of them went on to become a state manager of a major bank. They would sit there and take the minutes. They would write the notes. The bank manager would say, oh, you can note that down particularly, and I'll get Bill in Sydney to follow that through, or someone else to follow that through to answer a particular question. It was part of the training process. I think that's what we should be using our younger accountants for, to get them to understand how senior management actually do operate. They'll be sitting there, not necessarily to make a contribution unless they're asked to, but they are learning the process, keeping the minutes, making sure all the reports. I wouldn't just have them fronting up for the board meetings either. I'd have them as the person responsible for making sure the reports are prepared, analysed, distributed, make sure that 72-hour deadline is met, so that they understand the process as to why the directors need to be informed if they're going to add any value to this business. So that's the overview as I see it today, as we're looking at this very important question. What is your next strategic move in this overall process? It's the start of a new financial year. We're in mid-July already. 2.5 weeks of the first week of the new financial year are just about over. What strategies did you have to achieve in that first 2.5 weeks? Have they been implemented? I hope one of your strategies was to really get down to introducing advisory services to your clients. You can't go out and offer it to 100 clients tomorrow. I suggest you select one and get started. Get your team members involved in it. And then next month you might add another one. And by September you might be adding 2 or 3 more and continuing to slowly build up so that you understand. It'd be a great idea, I think, to get people from a number of different industries also, if you can, so that there's some understanding of the variations that can occur. But a lot of businesses also very similar. Everyone's got debtors. Everyone's got a thing called debtors' days outstanding. Everyone's got creditors' days outstanding. There's all businesses have got payroll to be paid, and it's got to be analysed. There's job cost records being kept. There's labour productivity percentages available that should be being analysed. That relates to a whole range of businesses. The benchmarking companies, I seem to have at least around 230 to 250 different business units in Australia. A lot of them are similar. But you need to be working with them to really understand that familiarity. So that's the summary that as I want to bring to you today on this podcast, that the actual implementation, the delivery of advisory, getting it into action, is the next strategic move, as I see it, for the vast majority of accounting firms in Australia. If you're one of those outstanding firms that have already implemented these strategies, congratulations. I'd love to hear from you, so you could talk on one of these podcasts and tell us about the interesting journey that you travelled on to deliver those services. If you would like to discuss any aspect of the matters that I've discussed with you in this podcast, please don't hesitate to contact me. All you need to do is send me an email and I will get back to you. peter@essbiztools.com.au. Our website is www.essbiztools.com.au. Please visit it and have a look at our material. And if you wish, you can complete the form on our website to book a complimentary 40-minute discussion with me, where I will talk through with you on the type of systems that I think, based on what you tell me about your firm, that you should implement to be able to deliver this very important range of services, advisory services for your clients. And then you will not have any problems at all with what the former tax commissioner forecast was going to occur. 3 years ago, he said in 3 to 5 years' time, so we're now right within that zone. And also the comments that have been made by the AI experts that by the end of this decade, compliance services as we currently know it will not exist. There's a lot of challenges there for accountants. We are the lucky profession because there are thousands of SMEs who need assistance. It's up to you to be able to talk to your clients and convince them that your firm can deliver those services to them, and we can be by your side assisting you to deliver those services. Have a great day. Thanks for listening. Goodbye.